Okay, I was gonna do this video like very professionally and with the webcam and everything like that, but it was gonna be way too complicated, and the biggest problem was I wouldn't be able to use my hands. I like to use my hands a lot. So I'm gonna do this classic. I'm gonna film this video classic. I have been using the 1OP indicator on top of all of my other high probability trade criteria for optimal entries and exits and for D1s, and I firmly believe that it has added about 0.5 profit factor as well as around 10% to my win rate. And I'm using the strategies that I learned with my momentum trade strategy development. And it's working extremely well. And I think in this environment, it's super key, and it works extremely well for lottos as well. So here's how I do it. So first of all, you have your charts. You have your D1 charts that you like, that have good room, risk, reward, all that stuff. The structure is nice. They have relative strength. They have good volume, blah, 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 all that good stuff, right? So now you're saying, okay, I got all my boxes checked. What else can I do? I'm basically doing everything I can possibly do, and I'm still getting spanked by a lot of these trades, and a lot of these things are just ripping against me. And how do I keep from getting the rug pulled on me? And how do I grab those trades that tend to just pop? It seems to be kind of a dice roll. And of course, trading does have a random aspect to it, but using this 1OP indicator on top of everything else for my entries and to vet the strength of the chart has been absolutely gold for me. So the 1OP indicator essentially is, it's an oscillator, and I have no damn idea what it actually measures. I don't know how it works. I don't know anything about the internals of it. Pete doesn't reveal a lot of secrets about it, but I do know that it works really, really nicely if you know how to use it. It's not magic. It won't make you win no matter what. And I think what it does is like measures the natural back and forth between buyers and sellers, and it's predictive, which is very interesting. It's not always right, but even when it's wrong, sometimes it gives you good information too. So the prediction basically is, this is my best way to explain it, and I could be completely wrong, but this is the analogy I use, and it's working for me to win trades. It tells you what team has the ball if this is a football game. The price action tells you where the ball is on the field, and the oscillator tells you what team has the ball. Now, obviously, you want to root for the right team, and you want your team to carry the ball in the furthest direction. So basically, you've got your solid line and your dotted line. When the solid line angles upwards, like more than flat upwards, and crosses the dotted line has to be at least flat, you have a bull cross. So basically, the bull team now has the ball. When it does the opposite, so when the solid line crosses the dotted line and angles downwards at least, with the dotted line at least flat, you now have a bear cross. Now, sometimes this can fake out. Sometimes it doesn't always go as planned, but that's essentially it. And then it's essentially that team's turn with the ball, and they will get a certain amount of time with the ball. Now, you might cross right back out, but essentially what you're trying to do when you're using this oscillator is you're trying to enter the trade when it's your team's fresh turn with the ball. And then they have the biggest chance, or the most chance statistically, to carry the ball the furthest because they just started their turn. So let's take a look at Google right here. Google was a very strong stock on Friday, okay? I've got the D1 chart up here. I've got the 5-minute chart down here. Here's why the D1 chart is so good. Now, I'm going to put this one on the D1 chart as well. Now, look at this. We have Google back in February getting a fresh bull cross, and it kind of chops around and pulls back, but then it has this massive move upwards without really a lot of action going on. And then we get this little pullback here. And this is where a lot of people got trapped and stuck. But because we were going so strongly and the 1OP wasn't really doing much, my thesis was that, oh shit, the bear team really sucks on this. They're playing a game of football right now, and the bear team have had like a long time to have a chance to take the ball back to their side, but they can't do it. So the bulls are just itching for it. And then we get down into here, and then as soon as we get this candle, we get this nasty cross here into a bull cross, it's party time. So even though we hadn't broken this resistance area, I felt very confident that the bulls had a good chance to push it back up. Now let's go down to the 5-minute right through here. The coolest thing about the 1OP indicator is when it doesn't do what it's supposed to do, which sounds kind of strange, but essentially when it's one team's turn and they can't get the ball anywhere in their direction at all, that is one of the juiciest entrances that you can possibly get. That's called a divergence. So we have this upward price action, and then you have this bear cross, which you should get some dropping with, but you're getting nothing at all. You're actually going back up. And then as soon as we get a bull cross, holy crap, it's the bull's turn, and they get to start exactly where they left off. They're going to stomp the other team. So they take this thing even further. And look, it happens again. It's supposed to go down based on, what normally would happen, but it doesn't. And then you get this juicy bull cross, and that's that rip all the way up to the top. So what I've been looking for specifically are stocks that have one of two things. Either one, they have a cross in the direction that I want just about to start on the D1 and on the 5 minute. So ideally on the D1 as well. So if we were to look at CAT, CAT has a fantastic, hang on, let me type it over here. CAT, did I get it? No, C-A-T-Y, what the hell? Okay, CAT, perfect. All right, so CAT has a really nice, fresh, smooth cross right through there. Okay, so we had some bearish and bullish action and a little bit of chop around through here, but then we get this fresh cross, which means it's a brand new turn, which means this thing could last a while. This cross could last all the way down to here or even further. And so we have a lot of time for our thesis to play out. So that's why I like to enter stocks that have just crossed. I don't like to enter stocks. Let's say this was going down and we were right up here at the precipice and about to cross. I wouldn't enter long here because it already had a chance. This cross is stale, but I would enter short up through there. You'll find a lot of D1s are kind of at the end of their turn. So they're just going and going and going and going and going, and you get in right at the top, and then they just cross right over, and you entered right on a fresh bear cross. So that's my first thing. I'm looking for a fresh cross, a fresh turn for the team that I want to win. I also look for that on the 5 minute chart as well. Okay, so if I am trading Google is the perfect example here. So if I'm trading Google, I would not enter long like here because it already had a lot of time to run. What I want to do is I want to enter kind of like in this zone somewhere around here so that I have some runway for my thesis to play out, for my trade to get somewhere, for the ball to get down the field a little bit before it has to survive another bear cycle. So that's my first thing. And then what I'm doing here is I have all my charts that I like, and I've also checked their D1s to make sure they're good to go. And then every once in a while, I just kind of type them in there and I just kind of filter through them and check, and I look at one and go, okay, it's not ready yet. Maybe it'll be ready later, et cetera, et cetera, et cetera. And then I stock and I wait for my entrances. And there's a lot of charts that look like amazing entries, but they have a stale cross, or they are just they're not ready to cross. So I just won't enter them. And those often get rug pulled on you all the time. Now, here's the second thing that I look for. This is better than the first thing. So obviously you want to enter on the first cross, on a fresh cross, and you want the D1 to have a fresh cross, etc. But the divergence is incredible. So these are these moments where it was actually the other team's turn and they didn't get anywhere. Either it kept trending up or it went flat. We call those divergences. So on Google, it had multiple bullish divergences all through. Okay, now it doesn't count as a divergence until you get back into the bull cross. But stocks that have survived a bear cross and are still going up, or vice versa, are usually extremely durable trends. They work really, really well, and I love those ones. So on Google, let's say I'm right here, I'm like, I don't know, should I enter right here on the cross? Like, what if it goes against me? What if this cross only lasts a little bit and it crosses back against me? Well, I know it survived a bear cross here, and it survived a bear cross here, and like even a little tiny one there. It's been divergent all day long. The chances of this thing going against me have diminished extremely. And divergences are my A+ entry. So a divergence would be a chart that has everything. It's got relative strength. Its structure is nice so that I can put my stop in a good spot. It has room to run, at least 1-to-1 ratio. It's got a lot of elevated relative volume, above 1, like above average relative volume. And it's got relative strength. And then it's got a fresh cross in the direction on the D1 that I want it to go. And it's survived a divergence. I don't believe that I have ever lost a trade with all of those boxes checked off. I don't believe I've lost a single trade like that. And I know that's a little hyperbolic, but I'm sure I will eventually. But that's the magic. So here's what I do. Throughout the day, sometimes I'm looking for specific types of like trades. So what I'll do is let's say I'm looking for a bullish trade because I want to enter a long. I'll type in divergence right through there. I might add like strength on the last 30 minutes above yesterday's high. Maybe I want something over 10 bucks. Maybe I want the average volume to be over 1 million. I don't want any ETFs. And then I get some results. And usually you don't get a lot of results. You can kind of look through those and take a look at those. And then I look at which ones of those. Sometimes I get a lot more. Sometimes you get like 20. I'll look at which ones of those have good chart structure for risk reward, have the relative strength I'm looking for, have the relative volume I'm looking for as well. Or sometimes I'll go through my TC2000 scanner, either ones that like just check the box, etc. And then I'll see ones that I like, and then I'll type them in up here and then see what the 1OP on them looks like as well. And if there's one that I like that has a great D1 1OP, it goes on the thumbnail, and then I just wait. I just wait to enter these suckers. So here's a perfect one, end of day, Oracle. This would have been a phenomenal lotto, but I was just kind of burnt out by then. Look at how long this thing had been going. Now it's a day trade, so even though this is a little bit of a stale cross, it will be like 1 or 2 days before this thing crosses over at the maximum. So right through here, this thing was supposed to be going down. The bears had the ball this whole time, and the stock just kept going up and up and up and up and up. So as soon as you get this cross right through here, that's a beautiful entry. And then you get this giant rip at the end. I don't know if the rip at the end had anything to do with it, but this is a beautiful divergence where the bears were supposed to take it somewhere and they couldn't at all. And then now it's the bulls' turn again, and they get to start right where they left off, and they get a fresh cross, and they get a lot of time with their turn. Beautiful, perfect entry right through there. On Friday, that's a great time for a lotto as well. So a little bit longer video, but that's how I'm using the 1OP indicator. I use it on SPY as well. I use the 1 minute sometimes too. I'll use the 1 minute for momentum tickers because often the 1 minute 1OP indicator can work with the 5 minute as well. Sometimes you'll have a nice little 5 minute cross, but the 1 minute is crossed opposite, and it'll burn up a lot of the time that the 5 minute has without any price action movement. And then it just goes nowhere. And that happens on SPY a lot as well. But yeah, okay, long video. That's the 1OP indicator. It's really kick-ass. I don't know how it actually works, but I'm using it and I win a lot with it.